Hello guys, this is Mr. Ibrahimthetrader of Gova Trading Academy. So let's continue guys, okay? So from where I stopped guys, I was saying that this was the point of control. I believe you guys can see that this is the area where we have high volume node, right?
Sorry,
That's
sir. Can you mute? Sorry, sir. Can you mute? Can you mute every other person so
okay.
that they
Let
won't
me
be
meet
distracted?
everyone. Let me meet everyone. So guys, you guys can clearly see where we have high volume node in the market. All right, so you guys can see where we have this high volume node in the market, right? And after seeing this high volume node in the market, you can see we have what we call the point of control. The red line you guys are seeing here is the point of control of today. So this point of control of today is going to serve as the area where we have the new supply for Friday. That's going to be the supply zone for Friday. Because remember I told you guys that banks usually have uncompleted transaction. Okay, let me continue with the explanation I was making the other time around this area. Then I'm going to come back into this explanation. So remember I was saying that if this is your house and we have other people's houses around here, at the back of your house. And these are your rooms here. This is the rooms you have in your house and so on and so forth. You have your wife and children in your house here, right? This is your gate, right? Now, this is you here. This is you, roughly, okay? Now, this is your compound. This is an area where you park your cars and so on and so forth. Now, this is your place of work. So let's say banks want to buy good. What? 100 billion. So their aim, remember what their aim is. Their aim is to buy. Remember, their aim is to buy. So, but let me continue with this example. On this example, I was saying that this is your place of work. Now, every day you usually go out to your workplace. If you go out to your workplace, at the end of the day, I believe we all know that you must come back to your house, isn't it? You must come back home. Or if you are going to come back home, are you going to go to other people's houses? Does it make sense if you go to other people's houses? No, it doesn't make sense if you go to other people's houses, right? You need to stay within your house. You need to stay within the lane of your house, right? So this is how banks usually trade. If banks have a demand zone, let's say, for example, banks are having this demand zone here. And this demand zone, remember I told you guys that banks don't usually put all their money at once in the market. They usually divide their money into pieces. But let us assume the pieces big banks are using here is 50-50, for example. This is just a rough example, okay? Sometimes they can divide it into 5 parts. So, but right now I'm using just 2 parts here. So let's say this is the zone of the big banks. And on this zone of the big banks, let us assume that banks are, so the first thing banks are going to do now is to put the $50 billion into the markets. Banks are going to put the first $50 billion, they are going to pump it into the markets. The $50 billion has been entered into the market. Now, if this $50 billion has been entered into the market, what is the $50 billion going to do? Is market going to go down or market is going to go up? The answer is market must go up. Why? Because the aim, remember their aim is to buy gold worth how much? $100 billion, right? So market price is going to go up. But we all know that market is not going to keep going up forever, right? So market is going to exhaust at some point. So Let us assume that market has exhausted here. The $50 billion has exhausted. So if the $50 billion has been exhausted, if banks are not having any sell trade around this area, what banks are going to be doing is banks are going to be waiting for retail traders to sell back into their zone. So retail traders are going to be selling back into their zone. If you notice, guys, if you guys have a demand zone, do you notice that the demand zone usually have a strong rally going up? On that strong rally going up, whenever market price is coming back into the zone, the coming down of the market is a weak movement coming down. That means that banks are the ones who took the market up in the first place here, and the retail traders are the ones bringing the market down on the second area here. Now, if banks see that market price is currently on their zone, as you can see, we have current market price currently on the big bank zone here. What banks are going to do is banks are going to enter the second part of their transaction, which is the other 50 billion. They must enter it. Now, if they enter the other 50 billion, is the other 50 billion going to go down and sell? It doesn't make sense if it went down to sell. It doesn't make sense. It makes sense if it's also buy, because the first transaction is to buy, the second is not going to sell. So the second must also do what? It must buy. It is a must. It is a capital must that it must do what the first thing did. You understand? It must do what the first thing did. So the first one here, the first transaction went up to buy. So definitely the second transaction must also do what? Must also go up and buy. The second transaction must also go up and buy. And that is how the 100 billion transaction is what? You can see it has been completed already here. So if market can do whatever it wants. Market can decide to come and break the zone. We don't care. So what we care about is the first retracement on the area. What you should be caring about is the first area. So the first area here, remember, markets went up. The 50 billion went up to buy. Second area also, when markets came into the second area, market went up to buy. Now, as a demand and supply trader, your focus should be on the first area here. If you are able to determine who owns this area, if you are able to determine who owns this first area here, then automatically you should be able to know who is going to trade in the second area. Automatically, you should be able to know. Because if banks are the owner of this first area here, if banks are the owner of the first rally in price that went up here, it means that market must come back to the origin of that movement. Market must come back to the origin of that rally in price. And market is going to go up the second time. You understand? So this is how banks usually trade. So again, let's go back to the logic again. Remember, I told you guys that banks usually have uncompleted transaction, which we call, banks usually have unfilled transaction or unfinished transaction on the previous day. They usually have it on the previous day or the previous week or the previous month or the previous year. They usually have it like that. Every single week, there's usually a supply that banks didn't complete on the previous week. So they must come back to fill it up on the new week. There's usually an unfinished transaction on the previous month, which banks were not able to complete on the previous month. They must come back into the new month and complete it. There's usually a transaction which banks usually have that they didn't complete on the previous year. So they must come back into a new year to complete it. I'm going to show you an example. I'm not just talking about what is not happening in the markets. Let's see. Okay, let me use my MT5. So this is my MT5 right now, okay? So on this MT5, you can see here, you can see what is happening here. Banks are having uncompleted transaction on the previous month around here. They came back into the new month to fill it up. You can see how they came back to fill it up on the new month. But let me go back to what I was explaining on the cluster delta. So my point here is using the previous day, you can see the previous day right now is having the volume around here, high volume around here, and that is where we have the point of control. So what is going to happen on Friday, which is today, Friday, remember this is Thursday here, this is Thursday. So on Thursday, banks are having uncompleted transaction on Thursday. And if you are a supply and demand trader, you should be able to know that this is a sell trade zone, you understand? Now on that sell trade zone, all you have to do is to mark out the area. What you have to do is just to mark out the area. When you mark the area, it means you are expecting market price to do what? You are expecting market price to come back into this zone here. When market price come back into this zone, you are expecting market price to sell off from the zone. Why? Because banks are having uncompleted transaction on the previous day here, which they must come back into a new day to fill it up, to complete it. You understand? So that is the logic of how banks usually trade. So what I just discussed right now is not something very simple. It is a very powerful strategy if you are implementing it to your trading. So if you guys have any question on this cluster delta, you guys can ask. You can see some of the trades I took today on GBP USD. Look at this trade here on GBP USD. Hold on, guys, hold on. So on this trade on GBP USD, you can see, guys, we have, hold on, guys, hold on, please. So on this trade, you can see the imbalance that we are having here. The imbalance that we are having in this area is a very high imbalance. Very high imbalance. The imbalance is an imbalance of 100 times 0. What is this 100? What does this 100 times 0 mean? What does it mean? What does it mean? Let me meet everyone. What does this 100 imbalance mean? Is it not good for you to be able to see in the market that an area is showing you where there's high imbalance? Are you not happy to see something showing you where there's imbalance in the market? Because imbalance in the market is what usually drives the market, whether the market should go down or whether the market should go up. Because we have three types of markets. We have the balanced market. We have the balanced market. We also have the imbalanced market. You understand? And we also have the market that is just consolidation. You understand? Nothing is there. Consolidation. Now, we don't usually see trading opportunity in this market because buyers and sellers are equal. For example, you have 100 buyers, you have 100 buyer and 100 seller. You can see no opportunity to trade, to take advantage in these markets here. In the markets here, market is just consolidating, you understand? But the market where we usually see trading opportunity is in a market where there's imbalance. This is what I like to see. I like to see imbalance in the market. For example, let's say there's an imbalance of 100 buyers. 100 buyers are in the market. And then we have seller. We have, let's say, for example, 50 sellers in the market. You can see that there's an imbalance between the seller and buyer, right? There's an imbalance in this market. So you can take advantage of this type of markets whenever you are trading. So you guys should try to take trades where there's imbalance in the market, not trying to take trades at anywhere you see any supply and demand formation. With the help of this cluster delta, the reason why I'm showing you guys this cluster delta is because retail traders, it is high time. It is high time you guys start using professional trading tools. It's been a while. You guys have been trading chart patterns, smart money concepts, ICT, and so on and so forth. You can see previously, retail traders previously don't know what supply and demand is previously. What they are used to is just technical analysis and indicators. But in the recent years, like 2 years ago to this year, I can see a lot of hype in the retail world about supply and demand strategies, about order flow, and so on and so forth. So it is very good to see that retail traders are beginning to open their eyes into what supply and demand is, but they are still making the mistake of not knowing the true supply and demand. The true supply and demand is by using the supply and demand of how banks usually trade, not anyhow strategy you see that someone just created. You understand? For example, now this is a trade based on logic. The logic here is there is 100 imbalance on this area, 100 imbalance. Now this 100 imbalance we are seeing on this area.
Excuse me.
Hold on, guys. Hold on. The 100 imbalance we are seeing on this area is that whenever you see 100 times 0, it means we have 100 buy contract and we have 0 sell contract in the area. Now, what does it mean? It means 1 GBP, if you guys don't know, 1 GBP contract is usually 62,500. Go and check it from anywhere. Go and browse it from anywhere. 1 GBP contract is 62,500. So in mathematics, if 1 GBP contract is 62,500, it means 100 times 100 multiplied by 62,500 is going to give us what? Use your calculator. Let me quickly use mine. 100 times 62,500 is going to give us 6 million. It's going to give us 6,250,000, isn't it? So you can see here we have on this zone alone, we have 6 million contracts traded on this zone. And that is what was able to push the market up here. Remember the logic of how banks usually trade. Remember, they pieces their order into pieces. You can see how they pieces their order into pieces here. Now, remember how the logic of the 50-50%. Let's say banks are having 50% of trade here. They came back to fill it up. You can see they came back here to fill it up. 50 went up to buy. I'm just using this 50 as a rough example, okay? 50 went up to buy. You can see market, the other transaction went up to buy also. You can see that. So this is how banks usually trade. If you can clearly see the first area where banks are trading, definitely you have the guarantee that market is going to come back into that area. And if market come back into that area, what the first area did is what the second area is going to do. Do you understand? Is what the second area is going to do, whether it's a buy trade or whether it's a sell trade. Okay. So now, how did I know this is? Let's say, for example, let's quickly go to the Clusterdelta website. So if you have any question, guys, you can ask.
Hello, Ibrahim.
Yeah, you can ask any question you have.
Hello.
Yeah, hello.
Thanks for your explanation.
All right. So do you have any question, guys? Any question?
Yes.
Good afternoon, sir.
I want to know your win rate with that strategy.
Remember, using the Clusterdelta tool, the win rate is all dependent on you as a trader, right? For example, you buy a Lamborghini. Buying that Lamborghini, is the Lamborghini going to drive itself, or are you going to drive the Lamborghini by yourself? If you don't know how to drive the Lamborghini, you are going to crash the car, right? You are going to crash the car, isn't it? Does that mean that the Lamborghini is not good? It doesn't mean it is not good, right? It doesn't mean it is not good. It is good, but you as an individual is the one that is not good enough, right? As a driver. So using a professional tool, it depends on you on how you use it, You understand? It all depends on you on how you use it. Okay.
Yes.
Now let's quickly go into this area.
Hello.
Look at the first. Hold on, guys. Hold on. You can see here. You can see what it says here. 1 GBP contract is what? 62500, right? 1 GBP contract. You can see 1 euro contract here. 1 euro contract here is how much? You can see 1 euro contract is 125,000. So any imbalance I see in the market, I multiply it by the contract to know if, because if the contract is up to 1 million, I'm looking for an imbalance where the contract is about 1 million, 1 million contracts, 1 million contracts and above. Do you understand? And above. If I can clearly see that there's 1 million contract and above, it means that banks are the owners of that area, are the owners of that zone. Do you understand? But any imbalance I see, and the imbalance is not up to a million, it means the imbalance can be for a retail trader. You understand? It can be for, so I'm not going to trade a trade whereby the contract is not up to a million contract. It means it is not strong enough. It's not strong enough.
Hello. Can I ask a question?
Yeah, you can ask your question, guys. You can ask your question.
Can you show me the MetaTrader screen?
All right, so this is it.
Okay. As per your indicator, there are two contracts, two green spots.
Yes.
And how you filter out the original trade, as both can be in real time trading, we can't understand, and how you filter out the both.
Okay, that's a very good question. Now let me upload another Euro USD chart. Let me quickly upload another Euro USD chart. Now you can see this is another Euro USD chart here. All right. On this Euro USD chart, I believe you guys can see that this is a rally in price, isn't it? This is a rally, drop-based rally. Look at it. This is a drop-based rally. This is a drop in price. This is the base, and this is the rally in price. The origin of the movement started from where? Started from here, isn't it?
Yes.
So banks, this is what banks usually do. In the market, let's say, for example, in the market, we have something like this. We have something like this. We have $2 here. We have $4 here. We have $4 here. We have $6. We have $8 here, for example. Let me quickly mute all of you. So we have $2 in the area here. Now, what banks usually do is if there's a zone around here like this, for example, we have a draw-based rally zone around here. As a trader, are you going to, or if you go to the market and you want to buy something, you want to buy tomato, and tomato, the price of tomato is currently at, the price of tomato right now, it is currently at $6. The price of tomato is currently at $6. You can see you won't buy that tomato, right? You won't buy it. You are going to wait. You are going to wait for the price of tomato to do what? To come down into the most cheapest price possible, which is $2, right? Which is $2 here. So banks don't usually trade blindly. They usually wait for the most cheapest price possible in the market. You understand? So that is how banks usually trade. So in this area, even if you see an imbalance here of a buy imbalance here, let's say, for example, there's a draw-based rally in the market here, and I can see a buy imbalance like this. I can see a buy imbalance here. Does it make sense for me to be trading this imbalance? It doesn't make sense. You understand? I need to be seeing the imbalance at the origin of the movement here. That's when I can start making sense of the zone. Do you understand?
Yeah, got your point. I think we can use the concept of discount and premium zones.
Yeah. So if you know what supply and demand trading is, you should be able to know the formation around here. You know, this zoom alone, this zoom alone is not enough for me to explain what a formation is, right? But my whole point here is that look at it. You can see there's a zone here yesterday, day before yesterday. You see how markets came back to fill it up. Do you see how markets came back to fill it up? So that is how banks usually trade. That's how they usually trade. So any other question? Any other question?
Yeah, I have another question.
Yeah, you can ask.
My question is, we should focus on number one, discount and premium zone, and the second thing is the more the imbalance is, the more the opportunity.
No. As a supply and demand trader, you need to be able to filter which zone is the good zone. You need to be able to filter which zone is the good zone. You understand? As a supply and demand trader, I know that this is the zone here. This is the zone here. So I mark out the area. After marking out the area, I waited for price to come back into the area and then see what is going to play out in the area. And then I took a buy trade. You can see the risk I took here was just 2 pips risk. The risk here is just 2 pips. And the reward is, you can see this is about 60 pips reward. 60 pips. That's about 1.
The indicator automatically calculate the stop loss value.
Your stop loss should be here. Your stop loss should be below the zone. Okay.
Yeah, when you point out your indicator, it shows 2 values. Can you please show me?
Which value is that?
GBP, yeah, this one. One is future price, one is forex price. What is the difference between those? Forex price is stop loss.
Okay, what it means is that in forex markets, there's something about forex market that you guys don't know. Number one, in the futures market, banks don't usually hide. Let me mute this. In the forex market, banks usually hide the details of their transaction. You understand? So that retail traders cannot see the details of their transaction. Not only retail traders and other traders, so that other traders cannot see the details of their transaction. However, in the futures market, banks usually submit the details of their transaction to an exchange. You understand? Banks usually submit the details of their transaction to an exchange. So that exchange, for example, we have many exchange here. We have the COMEX exchange, we have COMEX, we have CME. You know, CME is Chicago Mercantile Exchange, and so on and so forth. We have many exchanges like that. So let's say, for example, banks are having a transaction. They submitted the details to CME, the details of their transaction to CME. So as a retail trader, we go to CME to purchase the details of the transaction of the big banks. We purchase it. If you are using Sierra Chart, you usually buy the details of the transaction of the big banks if you are using Sierra Chart. But if you are using Clusterdelta, it is very free. It is free to use. All you have to do is just to subscribe to the Clusterdelta software, and it is going to come along with the details of the transaction, which is the futures price. Now, the difference between the futures price and the forex price is that we have what we call a chain like this. This is what we call a chain. Let me show you the chain we have. We have the interbank. We have the broker. We have you as the retail trader. We have the retail trader. So this is what usually happens in the market. In the forex, this is what usually happens in the forex market, okay? In the forex market, interbank are going to collect price from the CME. CME are going to provide price for interbank. Interbank are going to provide the price for brokers. Brokers are then going to provide the price for you. Let's say CME gave interbank the price of 1.2 in the market. CME is going to change the price to 1.21, for example. The broker is going to add his own price to be 1.22, for example. And that is what retail trader is. As a retail trader, this is what you are going to get. You can see there's a difference in price. The price is different because of the gap in this area. So you are not getting the real price in the market as a retail trader in the forex market. You understand? So, but if you are using the futures market, that is when you are using the real price in the market. That's when you are using the real price in the market, and so on and so forth. So that's why we have the futures price, and this Clusterdelta software is usually use the futures price. Okay, it's usually use the futures price, because the futures price is where the details of Big Bang's transaction is. Without this futures price, we won't be able to accurately determine the imbalance that we are having here. You can see we have imbalance of a buy imbalance of 23 times 0, right? On this area, we have an imbalance of 23 times 0 here. So if we only have the Forex price, the imbalance is not going to appear. The imbalance is not going to appear because the details on the Forex price is not usually shared to the public. But the details of the futures price is usually shared to the public. Do you understand the difference now?
Yeah, got your point. Second question is, when mitigated area like banks take orders from that place, can we use that area in future?
Okay, do you mean if you have a trade here which has already triggered, right?
Yeah.
If market happens to come back to the zone again, let's say for example this area has not happened yet. Let us assume that this area has not happened yet, and let's assume that market price is coming back into this zone. Should you be using the zone again? Is that your
Yes.
question?
Yes.
Personally, you shouldn't be using you shouldn't be using the zone again. You understand? You shouldn't be using the zone again, because the more price test a zone, the weaker it becomes. Do you understand? The more price test a zone, the weaker the zone becomes. Do you understand?
Yeah, got your point.
So that is it. So I like trading the first 3 tests. I like trading the first touch. You can see from this area, this is the first rally in price, right? Market price came back to the zone in this area, which is the second time when price came back to the zone, right? And that is a fresh retest. That is a pullback into the zone. So that is good to take. But if market price happens to come back to the zone again, I don't usually take it the third time. I don't usually take it. I only take, if you notice all my trades, I only take the first retest.
Yeah, I am new to your concept, and today I see your post in the group, and from that point I study your charts continuously for 4 to 5 hours. That's why I have some more questions than others.
All right. So anyone, do you have any other question, guys? Any other person? Do you have any other
Yes,
Kingsley,
yes,
Mr. Kingsley, do you have any question?
Which time frame you prefer?
Max Har, please let another person ask a question, okay?
Okay.
Yeah,
Mr.
good
Kingsley,
evening.
good evening.
Yeah, thank you very much. I wanted to ask, maybe I joined the meeting very late. How do we actually integrate this Clusterdelta software to our MT4, MT5?
Okay, it is very easy to integrate it into your MT4, MT5. The first step to take is to, let me quickly look at this. Hold on, just 1 minute, okay? Now, to be able to integrate it into your MT4, MT5, let's go to the website. Let's go to my Safari browser. On the Safari browser, let me go to this area. I believe you guys can see my screen, right? Hello, guys.
Yes.
I believe you can see my screen.
Yeah.
All right. Now, on the link, I can send you the link so that you guys can register. You can also try it for free for 5 days. There's a free trial. Now, one thing you guys need to know is I'm not the owner of the software, okay? It is a software by Clusterdelta, all right? So I'm just providing it I'm just introducing it to other traders so that you guys can also see what I'm seeing, because it doesn't make sense if there's something very good, which I'm making money in the market with it, the money I'm making in the market with it is not going to finish. So I don't have to be greedy. I can show you guys the way I'm picking the money is not going to finish. So you guys can also go there and pick up the money there. using the tool I'm also using. So there is a free room, no competition. You understand? The room is very free. So when you come into the link, this is the first page you are going to see. Or let me just log out. Let me log out here. This is the first page you are going to see. So the first thing you need to do is to sign up here. Okay. When you sign up, accept the terms and condition. After signing up, you need to deposit around here. Click on the deposit area here. That's after you've logged in. So let me log in again. So now I'm logged in. So after you've logged in, go to the deposit fund option area. Now change this area to, you can change it to $34 to be able to have the discount of 6 months. You understand? You can change it to $34 because if you use the $34 and you pay the $34 price, I can teach you how to use this software for free. You understand? For free. Also, if you don't want to pay the $34, it is also fine. You can also you can also pay $7.50 to try it for 1 month. But also, if you don't have the $7 to pay for 1 month subscription, you can also message me your email, and then I'm going to send the email to Clusterdelta customer care, and they are going to give you a free access for 5 days to be able to try it out for 5 days. So after you try it out for 5 days and you see how it is, even though you don't fully understand it, but you can see how it looks like after installing it, then you might decide to go in fully into the Clusterdelta and so on and so forth. So that is it. You can see you can pay with your card here. You can pay with your debit card or something. You can also pay with PayPal. You can see that. You can also pay with USDT. All right. You can also pay with USDT. So most people usually have difficult time in buying USDT. So if you are having difficult time in buying USDT, I usually sell USDT via Binance. Okay. Just today, I happen to register about 6 people today into Clusterdelta. All right. So by buying the USDT for them, by sending the equivalent in an amount, and then I pay it for them. So if you can do it yourself, it is also fine. All right. It is also fine. So my point here is, it is not a must for you to pay anything. You can start with zero by sending in your email to me, and then I'm going to forward your email to the Clusterdelta customer care to be able to give you a free trial, okay, to be able to test this out. So sadly, the Zoom meeting is just 1 hour, 30 minutes meeting. It is not enough time to explain some things to you guys, right? So, but I think what you learned enough is at least enough today, because today you learned that if banks are having a zone, they usually come back to fill it up, right? They usually come back to fill it up. So, but even if they have a zone on the previous day, they usually come back to
excuse me.
Remember, hold on. They usually come back to fill it up on the new day. So, but even if banks are having this zone here on the previous day, remember, you cannot just trade that area blindly. You must be able to see if that area is having high volume node on the market profile. Also, you must be able to see if that